Okay, plus traders, welcome again to another episode. Today we are going to look at the 20 EMA. If you are new to trading and this is the first time you are hearing about EMA actually means exponential moving average. We have simple moving average and we also have the exponential moving average. So today, what we look at today at EMA, it's a popular moving average. So many traders use it, starting from scalpers to day traders, swing traders, and position traders. But a lot of traders are using it the wrong way. They are using it the wrong way. So today, I want to clear some of these myths about the EMA. Alright, so first of all, how to apply the moving average on your chart. Just come to where you have the indicator segment right here and tap on it. You tap on it, you can now type moving average. If you want to use the normal moving average, you see the moving average. Then this is the other one, the exponential moving average or moving average weighted. So anyone you want to pick on, then you can just click it, then it will appear on your chart. All right, and the settings are actually simple. The settings are simple, but before I talk about the settings which I use, there is no best settings for moving averages, whether it's exponential or it's a simple moving average. There is no best settings for it. So it all depends on the trader's personality and how comfortable, or maybe the market behavior also. Because the 20 period moving average may work well in some markets, but in another asset class is not going to work perfectly fine. So it all depends on the market structure and also the trader's personality. So there's nothing like the best setting for moving averages, whether it's EMA or SMA. So there is a popular debate about which moving average to use. All right, as most traders says EMS are the best, some say SMS are the best. Personally, both of them are similar. There's a time I plotted a 20 EMA and also plotted a 20 SMA on my chart. The price difference is just very little, so it's the same thing. It doesn't really matter. What matters is the context at which you are applying it on the market. All right, so if you like, use an SMA or you can use an MA, it's all the same. All right, so that doesn't matter. So I've already brought up EMA on my chart, so I bring up the 20 EMA. Basically, what I use the EMA for, I use it as a pullback tool. I use the EMA as a pullback tool on my chart. Like, I don't actually use it to fine tune my entries. I see a lot of traders using their moving averages to fine tune entries. It's not like it's bad, but it's moving average is a lagging indicator. So if you rely on it, you'll be entering the trade very, very late. So I only use it as a pullback tool. Like, I want to see price maybe pull back in and maybe retest before I take my entry. Now, why I'm using it as a pullback tool is because it serves as a dynamic support and resistance on the chart. Like, if you can see this chart clearly right now, you can see as price is leaning towards the EMA right here. See, price is leaning towards. So if I was buying from this around here, once I see price here again, I can take another buy position. Right, so, and moving average is best applied on a trending market. Don't apply moving average on a ranging market. Like here, this is a corrective phase here. There is no possible way you are going to be able to use the moving average or EMS, SMS around here, because the price is ranging. Price is on a corrective phase, so you can't use it here. It's not ideal. If you try that, just be ready to lose your money. So apply your EMS or SMS on a trending market. If the market behavior is not trending, then forget about trading or looking at the EMS. I want to sound this as a warning. never you take a trade based on a moving average signal alone. That is not advisable, because if you do that, you'll be running on losses after taking that trade. Alright, so you need to combine two or three other indicators, not like indicators, but your entry triggers for you to validate that, okay, this is a signal or not. All right, so don't just because you see price pulling into your moving average and you decide to reject it, and you decide to pull the trigger. No, don't do that. It's not advisable at all. So bottom line is, only use 200 EMA in a strong trending market. Now, what do I mean by a strong trending market? I'm going to show you an example. Strong trending market is a very fast trend. Like price doesn't really pull back deeply. The pullbacks are short. Let me go to the 1 hour on this and see if I can get something similar. Now, this example here can be said to be a fast trend. What we have around here, you see, it's an uptrend, but you see, but the pullbacks are not deep. It's very fast. Maybe I should just do a simple drawing on that. Let's take this all off, and let's take this all off like this. All right, and try to draw something. So this is your trend line. No, I won't do that, so you guys won't laugh at my drawing today. So I'll do this. This is your trend line, and impulse, you get impulse. Let's say impulse pullback. Impulse pullback, then impulse again, pullback. This is another pullback. All right, now when you spot this kind of trend, this is when you can apply the 20 EMA on your chart, because the trend is moving so fast. And this is what I call the strong trend. It's moving so fast, so you apply your 20 EMA on this kind of trend. So when you see this kind of market behavior, this is when you use a 20 EMA. And from my little experience, I can tell you this 20 EMA that works on a fast trend works way better on the weekly time frame. Right, anytime you see price pulling back to the 20 EMA on a weekly time frame, it tends to be very concrete and it works better. So for me, it works better on a weekly time frame. You don't just need to take my words for it. All right, so just back test and forward test, whatever you find out, whatever you're comfortable with, then you can adopt that and use it. It's not a must you should use the EMA on your chart. All right, so then, but if you should spot an healthy trend, what I mean unhealthy trend is that when price, let's say market is trending higher, then the pullbacks are like deep, like big. Like, let me try to redraw this. Very deep pullbacks. Hey, take off. I think I should just draw a new one. Alright, so we are seeing deep pullbacks. So when you get deep pullbacks, that is when you now apply. So if the market is giving you deep pullbacks like this, don't use the 20 EMA. All right, rather use the 50 EMA. The 50 EMA, like I have it here. So we are going to look at rundown on some charts to see how this plays out on the live market. So I want you to get the concept first, how it works. So when you see a market behavior, deep pullbacks, it's best to use the 50 EMA, not the 20 EMA. All right, so that is that for now, and I need to delete all this thing right away. Delete and delete and delete again. All right, so we are done with that. So I'm going to pull up the 50 EMA. So we are going to do a comparison on how these two EMAs works on the different market scenarios. All right, so first we are going to test run with the pound dollar. So hey, I don't want to delete this trade. I'm tracking it. It's actually going in our favor. I sent out that signals yesterday and it's actually moving in our favor, though I've broken even, so I should adjust this. That is what I do on my chart. I'm showing, thank God you are seeing me do this live right away. So broken even, so that is a risk-free trade, and today is a Friday, so that break even is highly needed before the market goes crazy, you know. All right, so let me bring up the 50 EMA. So here on this chart I have two moving average being set up. The black EMA here, that is the 20 EMA, and the red EMA here is the 50 exponential moving average. So let's see how this actually works. You see where the 20 is, you see where the 50 is. So that is the reason I'm saying this was a fast move. This was a very strong trend. So that's why I said use the 20 EMA for a fast trend. That is the daily. Let's look at other time frames. Let's look at the 4-hour time frame and see how this thing is like. Right, so this is the 4-hour. And see how it's still working. Like when it was here, this is the consolidation phase. You don't need to trade that. Alright, this is when it was trending down. Price was really trending down. See where we have the 20 EMA. See, works better for a fast a strong trend. Pull back, drop again, but it didn't reach the 50. So let's look at another pair, AUD USD. We start from the higher time frame. Alright, look at how sexy it is on the monthly time frame. See, alright, now if you were to trade off the monthly time frame right now, you won't be using this 20 EMA right here. You see, you won't be using this 20 EMA right here. You'll be using the 50 EMA because this is an healthy trend. You see, when price drops, look at the distance of the pullback. The pullback is big, drop, then you pull back, big, drop, pull back, big. So if you are to trade off this monthly time frame, you should be using the 50 EMA right here because this is an healthy trend. Right, I have explained earlier what the difference between a strong trend and unhealthy trend. So this is an healthy trend. Let's look at other time frames. So this is the weekly time frame right here. You see, looks so sweet, like chocolate, right? So on the weekly tool was an healthy trend. Look at how deep the pullbacks were. So if you were to trade off this weekly time frame now, you should be using the 50 EMA, not the 20 EMA. All right, the 50 EMA, not the 20 EMA. Let's dive down to another time frame. I'm just showing you how this thing works and how best to use them. So whenever you put a 20 EMA on your chart and you see that it's not, and the market behavior is not a strong trend, please take off that EMA. Don't try forcing yourself looking for it because it won't work for you. So you see right here, this was a fast move here, fast trend. See how it's aligned the prices, you know, at the EMA, the 20 EMA. See, that's the 20 EMA right here. But here, if I were to trade this pair, I won't be using a 20 EMA on this. I won't use a 20 EMA, and I'm not going to use a 50 EMA on a daily time frame on this chart. All right, so let's look at another one. Let's look at the CAD JPY. Let's look at CAD JPY. You start from the higher time frame. So this is CAD JPY. You can see the price, how it's moving down, it's trending down, and look at how the moving average are playing out. Look at how the moving average are playing out. See, now on this, if I were to use any moving average here on the monthly, I would definitely not be using the 20 EMA or the 50 EMA, because you see how prices are cutting through here. Maybe I'll use a higher EMA, maybe 100 EMA or 100 EMA, or maybe a 70 EMA to take the price higher. So look at how choppy it looks on the weekly. I won't even dream of using the 20 EMA on or the 50 EMA on this Canadian JPY chart, because the market based on the market structure level, this is a bearish market. You can see that it's a bearish market. But if you want to rely on this to put your entry, then you are going to be losing money like crazy. So you see why I'm saying make sure you identify the market structure first. When you identify the market structure, it is way easier then to know where to spot where your entries will come in and where you can actually leave the market. So CAD JPY, no, not good for the moving average 20 or 50. Personally, I use the 20 EMA on my charts. I use the 20 EMA and I use them on the higher time frame, not really on the lower time frame, except I see a strong trend on a lower time frame before I can decide to use it on a lower time frame, like maybe 2-hour or a 4-hour time frame. Right, so look at this, just imagine this is the daily. It's choppy here. Just look at this. So you can't use that here. I believe you are getting the point and you understand what I am saying, like you are following me right away. And I believe after going through this video, you will now be able to use the EMAs or any moving average correctly. All right, should know how to use it correctly by now. Okay, so if you don't understand this video, watch it over and over again. You can watch it up to 10 times, it doesn't matter. Just make sure everything sinks in, and when you're done with it, if you learned something from this video, you like this video, like the video, give it a thumbs up. Like this video, click on the like button again. all right, so that is all on EMA, 20 EMA. Alright, so I believe you have learned a lot from this course, the entries and exit pizza. So you need to implement everything you have learned, everything you have written down on your notepad, back tested, forward tested, and make sure you are recording and document everything, because if you're not documenting, then you are up to lose out if you're not documenting, because it's only when you document you can actually do a review on it and say, okay, how is it going? Is this working well for me? Is it not working well for me? So make sure you are documenting as you are also implementing. All right, so I'll see you on the next one.